Good day, ladies and gentlemen. I hope you're well. So, today we're going to be talking about gold, silver, and Bitcoin, not from the hype perspective, but more from a macro and historical one based upon the charts and cycles. So, over the past year, gold and silver both of them have been making new all-time highs, and their trajectory is upward. Gold has repeatedly broken records, and silver has finally surpassed its 2011 peak after more than a decade. So, the key questions that we're asking today is, why are precious metals rallying now? What role do interest rates play and central banks play in this? Why does silver behave differently from gold? And most importantly, what does this mean for Bitcoin? Because historically, when you zoom out, these assets are not random. There is chaos. There is order in the chaos. Now, before we start, we kind of need to explain what yield is. Before we do that, Bill Noble, welcome today. How are you?
Hi, I'm good. Thanks for having me.
Formation, how are you today?
I'm good. Not holding enough silver.
Not holding. Let me just quickly check who's in the chat, just very quickly. So we have Mark Volmer. Hello, Mark. I hope you're well. We have Silver Days XRP. I hope you're well. Do hit the likes and please do subscribe. We've got me in the chat, and then we've got Black Hat Team. How are you, Black Hat Team? We've also got John Legend, and we've got Rob C, a fellow Brit. There are more people watching. Do pop in and say hi in the chat. Okay, let's just go quickly. I want to just quickly explain the concept, the very important concept of yield. So yield simply means income that you receive from holding an asset. Examples of yield assets include things like saving accounts, government bonds, corporate bonds, dividend paying stocks. These pay you interest or income while you hold them. Now, non-yield investments include gold, silver, and Bitcoin. They do not pay interest. Their value comes entirely from price appreciation. So this does matter because interest rates are high. When interest rates are high, yield assets are more attractive. You can earn a good amount just by holding cash, bonds. But when interest rates fall, these yields drop too, and they can drop suddenly. So holding cash pays less, if that makes sense. And new bonds often lower returns. So at this point, non-yield assets but become competitive again. So when banks move from QT to QE, and this is obviously where central banks come in, and they have, over the past year, a lot of them have started to move from tightening to easing policy. So you have Switzerland's central banks, they've been cutting in 2025, and they've actually taken their policy down to 0%. Canada has also been cutting last year in 2024 and in 2025. The Bank of England has cut again this month in November 2025, and the Fed has already made cuts during the year, and they've cut again in December in this month. So basically, they're saying that they have cut, but also news is coming out that they may cut again. So this is why markets are starting to price in a wider easing cycle. It's not just one country, it's several. So banks, when the rates are cut, holding gold and silver can become more attractive because you're giving up less interest, and you're earning less income from things like cash and bonds. Real yields often fall as the rates come down, and that tends to support gold. And that's probably what we're seeing. We'll find out. That's probably what we're seeing now. People also feel less concerned about long-term purchasing power, especially if money gets easier again. So gold often does well before and during easing cycles. But here's the key point. Gold doesn't rise because of one central bank. It rises when there's a global trend, and the global trend is shifting. When lots of economies are slowing down, they're carrying heavy debt, and they're facing refinancing pressure, investors start to think, if rates fall again, what am I holding? Is it actually going to hold value? And that's why, and that's where gold and silver come in. Bitcoin often moves with strict central bank policies are being cut. So when they're being cut, the rates are being cut. They're stopping tightening, quantitative tightening. Borrowing comes cheaper, and investors feel more confident taking risks. Bitcoin often does better. It should be doing better. It should be doing better. And we'll come into that as well, because when rates are high, borrowing gets expensive and people prefer safer assets. So Bitcoin does often struggle. Bitcoin, often rises when money flows around the financial systems. Things like when rates fall, when lending becomes easier, and often when struggles with money, when the banks and countries struggle with money, it pulls back, i.e. when the interest rates are going up, lending becomes tighter. Is this what, Bill and Formation, is this what we're seeing now with just as a whole, before we go into things like geopolitics and all the rest of it? Is this what we're seeing with the banks, and is this what they're reacting to, gold and silver?
Okay, so the first thing you'll notice is that gold and silver are priced in US dollars. So given the fact that our Congress or Parliament doesn't have any credibility, the president's ratings are dramatically lower than they were a year ago, and Powell has made just about every mistake possible.
Mm-hmm.
And we're selling $9 trillion in bonds next year, the dollar has to go down. Now, the dollar can't go down in the fiat currency market because no one wants to buy the yen or the euro or sterling. So how does the dollar go down? Well, it goes down when metals rise, because gold and silver, when I came into the market, were traditionally attached to fiat currency desks. So the way the dollar falls is you're watching, gold and silver number go up. It takes more US dollars to buy an ounce of gold or silver. So as gold and silver rise, the dollar is falling. Now, I think that's the best way to look at it, when either rates fall, as you said, or there's a credibility problem or a geopolitical threat. I would focus what I would talk about today around the credibility problem, Japan, United States, etc. Don't want to be an air hog, but that would be like how I would open it up. It's about credibility and the dollar falling.
Mm-hmm, mm-hmm. And I think we're going to see that as well, aren't we? We're going to see it a little bit more. So when rates are cut, etc., the dollar's going to fall more. Is it going to be hit that like that?
Right. I mean, when rates fall, it's because either the federal government is, printing, the Treasury is printing, or the Fed is printing. Everybody can print. So the more dollars they flood into the system, or the lower rates go. I mean, in the old days, what the Fed did with short-term interest rates mattered. Now it's just how much money are they pushing into the system. This is, of course, how much the government spends. What is the Fed pushing in on QE? there's a very strong demand out there in the world for dollars. Us crypto people, find that kind of offensive, but it's true. But, it's going to come to critical mass. It has in precious metals. The more they flood the system with dollars and the less credibility those dollars have because of QE or the perceptions of future QE, the dollar falls.
Mhm. Are you seeing this as well, Formation, that we've come to an area, we've come to a time now where we've had Switzerland's bank cutting rates. Their policies are almost at zero, or it's at zero now. Canada's been cutting last year and this year. Bank of England's cut again just this month. The Fed has cut again just this month. Are people sitting back and looking, well, you know what happens if they cut again? And is that why they're now going, is that one of the reasons, do you think, they're going into gold?
I think so. Yeah, I think it's like Bill said, like there are basically more dollars right now. So a dollar is worth less. So people are going to look like, okay, I can stay in dollars. That's not going to benefit me. So what's the second best? And that's metals. Like metals is a flight to safety, right? And maybe we'll get back to the crypto thing, but that's supposed to be that, but that's still more of a risk on market. So I think that people indeed are looking at like, okay, there are more dollars. Where can I go to keep my wealth? And then gold, silver, yeah, it's a logical choice, I think.
Mm-hmm, mm-hmm. So with gold and silver, it's not just interest rates, it's not just monetary policy that affect their prices, affect them and get them to move. It's also geopolitical. So when interest rates, on the other side, the geopolitical uncertainty. So gold has always this monetary insurance asset when uncertainty rises either from global conflict, such as, and we've spoken about this, the Russian and Ukraine tension, and what we did see with Russia manipulating Bitcoin's market at the time, probably did the same in other markets as well. Flare-ups in the Middle East. We've got the US and Venezuela now as well. Those tensions are rising. I think they're sending a warship or something similar to that. So a lot of people are now looking to gold and silver, and this is what happens. There's also trade uncertainty, and this is when big economies hit each other with trade tariffs and export controls. Supply chains split and investors get more cautious, and we have seen that earlier in the year. And it still hasn't been, all of it hasn't been sorted. Another reason why gold tends to rise, or people tend to, go to gold, maybe go to silver, outside of, other places like holding cash and bonds and all the rest of it, is when the currency is weaponized, when reserves can be frozen, payment paths can be restricted, like sanctions, the SWIFT restriction. Countries and investors look for assets outside of the system, and gold is, and it always has been, a classic choice. Sovereign debt stress is another thing. So when government debt worry rises, and we did this last live stream as well, investors start to question the long-term stability of bonds and currencies. So in these environments, and we're seeing this now, it's like the perfect storm. Capital tends to rotate into other assets that are globally recognized, that cannot be printed, that are classified as hard money. Gold does benefit the most there. No matter what we think about Bitcoin, no matter what we think about silver, gold is going to be number one, or it is number one at the moment. Now, silver does benefit too, but in a different way. There is an important difference here, because silver is both a monetary metal, but it's also an industrial metal too. And this kind of means that gold reacts mainly to fear, uncertainty, and bank policy. Silver reacts to fear, policy, uncertainty, but also industrial demand. So Bitcoin as well, it reacts far more volatilely to things like global political events and concerns. And we've spoken about them so much on this channel, but it's not making all-time highs, which is a bit annoying. And I'm going to bring up the gold and silver chart in a minute, but with Bitcoin, why is it not moving like gold and silver? Has gold literally just got a 5,000-year head start on Bitcoin? Bill, for you first, if that's okay.
Of course. Okay, let's talk about geopolitics. What's a constant? Russia, Ukraine, Middle East. Middle East is going to heat up again. But if all that was a problem, oil would be higher. Right now, an ounce of silver is worth more than a barrel of oil. So what's different? All right. Well, here's my theory. The Chinese system is fragile. Their financial system is fragile. They have a $7 trillion problem with their property markets from their days of state capitalism. They have a real estate problem. So what does Donald Trump do? He puts tariffs on their products. He disrupts their trade system. He's got aircraft carriers outside of Taiwan. Okay. So that puts a lot of pressure on the Chinese. I mean, that's not a trivial matter. So the Chinese and the Russians have been hoarding gold for 20 years. I mean, their purchases are underreported. They're literally just kind of buying it all. Now, Bitcoin, on the other hand, is now, like it or not, affiliated with America, with Trump, the whole crypto president thing from a year ago. So here's what the Chinese do. They start buying physical gold, and that rally accelerates because of all the problems in the world that you've mentioned. Meanwhile, Bitcoin is affected by the Binance hack and these huge wicks down that you had. And people are not very curious as to how a giant company like Binance could just have its order book break and have 80% wicks down. The lack of curiosity as to how that happened is shocking, right? So that sounds like our friends, the Chinese, right? They hack Binance. And then all of a sudden, a week ago, you had articles that Chinese and Russian miners were suddenly being shut down and forced to sell Bitcoin. So the Chinese are ramming gold and silver, and they're leaning on Bitcoin, and, causing, altcoins to literally melt down because of the Binance hack and a lack of confidence. Now, why are the Chinese ramming gold and silver? Well, they're ramming gold and silver because they're trying to create a default. In other words, it's the worst kept secret in metals markets that everybody who has a piece of paper that says, I own silver or I own gold, there isn't enough gold to satisfy the futures contracts or ETFs. There just isn't. So if the AI data center build out guys come along and say, hey, I want my silver, I need it. Well, guess what? This is getting to a point where somebody is not going to get the silver that they asked for. And they're going to go to what's called cash settlement. I mean, it's going to be like a betting market. Like, well, sorry, guys, this used to be a way to get silver, but now you just kind of bet on the price and we settle everything for cash. All right. That creates a trust problem. This is what the Chinese want. They want a trust problem in our markets, meaning, wow, this was a market where I could get silver or soybeans or oil, and maybe I can't get it. This is not something the Fed can print its way out of. It's not a liquidity problem. It's a trust problem. Now, as you might suspect, and I'll stop here, if there's a trust problem in the economy, okay, not only do precious metals wind up mooning, but Bitcoin follows, because Bitcoin is the ultimate trustless asset. So silver and gold are going to become a trust crisis. Do you trust the legacy system? And, silver goes to 100, the answer to that question will be no. And then there'll be a monster pivot over to Bitcoin. Other than that, I have nothing to say.
Okay, bye.
No. But I mean, the crypto point is if you look at altcoins melting down, right? It's an absolute meltdown. It's because literally when they broke Binance, they broke altcoins. There's no sponsor. There's nobody underneath. And then all the speculators, they were on Robinhood and now they're in silver. I do a video on silver, 50K views on TikTok on an account with 35K followers.
Yeah.
Right. It's insane. So lousy crypto charts, and FOMOTION. I still got your Bitcoin dominance X stables up here, brother. Like every day, every day.
It's good, right?
It's amazing. Because, one of the things that everyone keeps talking about in crypto, and then I promise I'll stop, is that all the charts are broken, right? Bitcoin's broken, trend lines are broken, everything's broken. Looks like, Bitcoin dominance wants to go up a full percentage. Everything's busted. Now, what would happen? Just a question. What would happen if the charts unbusted or fixed themselves suddenly? If everybody goes, "Ooh, look, the chart looks good." I mean, would you even be able to buy Bitcoin at that point? No, you wouldn't. So is this terrible for Bitcoin? Yeah, I guess, because all the money is flying into silver. But, guys like FOMOTION and, Bitcoin dominance and guys who are really good at charts, they'll tell you what it takes to flip the charts. They'll tell you. And, if the chart's ever flipped because of some sort of silver black swan, it goes from all sellers to all buyers very quickly. It's not going to help you today. Something to keep an eye on, right? You're watching those charts. FOMOTION is watching those charts, trying to find that reversal. Sorry, go ahead.
I was going to say, we've got a storm here in the UK. So my internet's in and out. I don't know if you guys can hear me. Can you hear me okay?
I can hear you.
Yeah, can hear you. You're frozen though,
Okay,
but the sound
awesome.
is still good.
Okay. So carry on FOMOTION. If you carry on FOMOTION, and then I'll go on to silver, and I'll share my screen with silver.
I think, to be honest, most is already kind of said about this, but this is for now, I think, just a perfect setup. It is also, when you especially look at silver right now, but the thing was also the same with gold, it is becoming a little too hypey. It feels almost to me like people were talking about meme coins at the end of 2024. You should have bought this, you should have bought that. Yeah, like in hindsight, you should have, could have, would have. At the moment, it feels like not a bubble, but it feels like something that might, take a good go off. But then the attention will go somewhere else again. Like, it's not that the attention suddenly disappears. Now the people who I saw and heard talking about altcoins 1 year ago are now talking about silver. These are mostly the same people that will take that money, if they're in the first place, and go back to the crypto market whenever there's a 5% correction going on. I think that this is adding a lot of fuel to the tank, actually. And yeah, at the moment, indeed, I think the reason for all of this is that there's just a lot of tension at the moment in the world. Everything is already said, but especially with the tariffs, indeed, there's so much tension going on, and people just want a flight to safety. And last year has proven us that crypto, especially altcoins, are not the flight to safety. That's the casino once we are safe. But we first have to be safe in the first place. And that's kind of what silver and gold are now doing for us. I mean, the rate cuts are kind of being now priced in somewhat. Central banks were buying a lot of gold. And yeah, this is just a safe asset. And crypto isn't really, but I think that this is overall just a transitioning phase in the business cycle as well. And there are really interesting charts that you can look at. I'll show later, but if you look at the total three excluding stable coins and you put them against the gold silver sector, yeah, that's a chart that you could say, like, I don't know, I don't want to call for bottoms, but yeah, that chart looks pretty interesting. If people say altcoins have been in a bear market, depends what you put it against. But if you put it against gold, silver, then yeah, sure. And it looks like we are closer to a bottom than a top right now. It feels really bubblish, actually, to me. So it's a good setup, I think.
Okay, let's talk about silver now. And I might freeze. Am I frozen? I've got a feeling I'm frozen. Can you guys hear me okay, though?
You're frozen.
Yeah, you're frozen, but we can hear you.
Okay, so when it comes to silver, silver peaked near, I think it was $49 in 2011. After that, it completely collapsed. I'm not going to show you my screen, but I'm pretty sure Formation can show you his screen later. It's literally underperformed for over a decade, even though it does have more utility than gold. It stayed below its previous all-time high for roughly 15 years. And anyone holding silver from 2011 had to wait a very, very long time just to break even. Now, in late 2025, i.e. just now, silver finally reached the same level that it was in 2011, and it's broken above it, and it's gone up really, really sharply. Now it's so this matters because it tells us silver is not in a bubble. It's not in a bubble. It's gone through a full structural reset. And the move came after years of compression. So historically, after these long consolidations, we tend to see a complete price repricing once it's broken. So if silver needed 15 years to reclaim its high, what are the chances with this macro backdrop that this breakout is more structural? And also because silver is both, it has a lot of utility because it's both monetary and it's also industrial. What side do you think is driving this move right now?
Okay, well, I think the industrial thing got it started, and I think FOMOTION just basically said it correctly. It's just a freight train. It's just an object in motion, right? And people are afraid that they're not going to get to buy silver. They're not going to get the silver that they want. Like China has a physical metals exchange, right? But things like COMEX in the American markets, London Metals Exchange, the people who need it, they're panicking. I mean, it's that simple. I mean, because if you look at this, right? If you look at this, right, this is the silver monthly chart. So here is QE, right, from 2007 on to 2012. This is all this money flowing into silver. There's no money flowing into silver. There's nothing. It's just getting started. So it's not going up because it's an investment. It's not going up because of QE. It's going up for another reason. Most likely industrial demand. Okay. And just a good old fashioned commodities panic. Before altcoins, these were the altcoins. FOMOTION is right. Total 3 versus silver is spot on. Now, if silver can act like this, altcoins can act like this eventually. Right. But this is a straight up panic to get physical silver, because this has been a problem in this market. It's a worst kept secret in metals, just that finally it's now happening.
And they're using silver in bombs now as well. So the supply of silver is going to be going down. Sorry, Formation, you wanted to put up your screen.
Yeah, well, I mean, this is indeed like FOMO. And I think indeed before it was silver and metals and palladium and what else. And now it's altcoins. Indeed. I find it hard to find a good correlation between crypto and metals because maybe crypto is so new still. right? This is silver with Bitcoin overlaid, and when silver started to, here it went down, Bitcoin went down. Here silver started to go up, Bitcoin was already going up. It's kind of all over the place, but what I do notice is that we haven't seen many FOMO candles on silver except for this one in 2020, which is typical because that's also when the whole business cycle was kind of crap like it is right now. So the reason macro might have a lot to do with it, actually. But you can see that people first need to be convinced, right? They first need to see, like, okay, there's money again, they're printing, we want to spend it somewhere, but Bitcoin, altcoins, I don't know about that. Let's go into silver. And silver kind of shows, like, okay, yeah, it's safe to do, you can do it, it goes up. And after that, you can also see that Bitcoin takes a real decent lag up. So yeah, again, I don't know if I see any chart like this, any altcoin, I'm happy to miss out on that. Also, if it goes for silver, and just let it run and see what the catch-up trade is going to be. I'm not trying to get FOMO because of this right now, but yeah, again, total 3 ES, so excluding stable coins, against the XAU, the gold silver sector. Yeah, like I said, altcoins are against metals in a bear market, in a fat bear market, but that already started 1 year ago. And if we typically want to go with how long do bear markets last, well, we are already kind of in it for 1 year, and you see the so far diminishing returns, minus 92%, minus 81%, and now we're sitting minus 76%. Could go lower, I don't know, sure, but overall, looking at this, I'm like, okay, this is a matter of rotation right now. It's when people ask, like, where's the money coming from? Well, metals is one of them. Like, there, apparently people have a lot of money to spend on these kind of things. It's happening right now if you look at silver and at gold. So it's just a matter of rotation. And what's going to cause it? Again, I think that if the business cycle resets, if the rates are really being cut, if QE is going on in full glory, if the inflation numbers are getting better, and that could be anywhere between now and half a year or a year from now, I don't know. But I think that this is, at the end of the day, it's just a lot of fuel in the tank, and it first has to put people through the disbelief stage. Like, you see, you should have bought metals. Yeah, every dog has its day, but try to look, what could potentially be next. And I'm pretty happy if I look at this setup. Actually, it's just a patience game. We lost our host.
We lost the host.
Uh-oh.
All right. Well, here I'll keep it going. So here's I knew you. I was hoping you were going to do that because you're great at that. I actually did it with the stocks. So I did silver mining, gold mining, XAU versus Galaxy Digital and MicroStrategy MSTR. Right. Yeah, I mean, I have it up here. Feel free to show it. I mean, basically gold stocks going straight up, MicroStrategy, all the miners, certain miners that are not in AI, everything crypto native just has gotten wrecked lately as gold stocks have gone straight up. So, you're right. The money in the stock market is going this way. And the thing that's even scarier, frankly, is that if you look at the general public and their allocation to the gold ETF, like GLD, the general public and pension funds and all these people, they're underinvested in GLD, in gold. So they're underinvested in Bitcoin. We always talk about that. But the scary thing is money, this move has been so fast in gold and silver that legacy has not had an opportunity to get invested, which is really kind of scary, especially if there's a trust problem, how high this market could go. this metals market. I mean, I know it looks like FOMO, but there's a problem with the structure of the market. Like Bitcoin is Bitcoin. It's 21 million Bitcoin. Like, if you do a trade, I mean, if you leave it on a centralized exchange, you could have a problem, right?
Yeah.
You don't know if your Bitcoin on Coinbase is actually your Bitcoin. You don't know. But if you have self-custody, you have it. You have it. So, but the thing is, if trust fails in legacy, that's Bitcoin, that's ETH, that's altcoins. Because decentralization wins if centralized entities fail. You probably would also have a panic. Like if people couldn't get silver, I mean, they're already ripping Bitcoin off exchanges. You might not be able to get Bitcoin on a centralized exchange without paying some huge spread or premium. How funny would that be?
I think that's very
Think about it.
If I'm to be honest, I really do. Okay, so historically, the order has often looked like stocks, then gold, silver, and then Bitcoin comes last. And that's how we've sort of moved. Gold has always been a protect your wealth asset. Bitcoin has been more of a grow your wealth asset, if that makes sense. So what do we see here? We see Bitcoin, gold making all-time highs, silver coming out of a decade-long range. Rate cuts are coming in. Rate cuts have happened. It's more likely that more are going to, come down the line. Confidence in fiat currencies is getting weak, and this is the backdrop of what we're in now. So not because Bitcoin is the same as gold or silver, because it isn't, but because Bitcoin is another way that people express, say, for example, the same idea. I want scarcity. I want something outside of the system. I want an asset that cannot be printed. So Bitcoin often becomes the bigger move, because when liquidity comes into Bitcoin, when liquidity moves into Bitcoins, because the market cap is so low, we see those very, very heavy pumps in Bitcoin. So is gold and silver like a signal, or is it just too early to say? Because there's been a neutral correlation. There hasn't been any sort of set correlation. Would you say it's like some sort of signal, or does it really not mean very much when it comes to Bitcoin?
I would vote for signal. In other words, gold equals fear of a problem that requires a policy response, period. Right? In other words, let's move off exchange mechanics and panic to get the physical metals. Something is wrong out there. Obviously, there's something wrong with the Japanese bond market. They tried to raise rates for credibility and lost more credibility. We have to print 9 trillion. I don't know. We rolled out the new Trump destroyer today, Navy ships. Wow, really? Wow, it's just like, did they have gold trim on them? Yeah, I mean, it's like mind-boggling, these type of problems that are out there in the world, and gold is reacting, and then gold and silver are pricing in the next round of mega QE, and then Bitcoin takes off once the policy response is understood, believable, and permanent. This is Arthur Hayes. That's where I got that from, right? Bitcoin doesn't go until the QE is actually there and possibly permanent, which is why I keep saying, okay, all the charts are broken, but they can get unbroken very quickly if there's a policy response needed. Now, maybe it's in February off some event, right? I mean, if they waited 15 years in silver, we can wait another 3 months in Bitcoin.
Oh, yeah.
I'm saying? Like, people are like, oh my God, I'm rage quitting crypto. Shut up, Bill. I don't want to hear it anymore. Okay, bro. Yeah, 3 months. They waited. I know guys who have literally been waiting. These were guys who were long in 2008. They rode it all the way up. They rode it all the way back down, and they never got out. They just bought more.
Of silver as it was going down.
Silver and gold. I mean, it's an understood thing, like on sort of more conservative right-wing news channels. I mean, gold and silver companies ran commercials aimed at older people for years, while that market didn't move at all. I mean, it was like every day there was a commercial everywhere you went. Buy gold and silver. The market went nowhere. Buy gold and silver. Equities going up. Bitcoin's mooning. Buy gold and silver. Guess what? Those guys wound up being right, but they had to wait. They had to wait. They had to watch Nvidia go up. They had to watch they watched everything moon except what they owned. That's the important lesson for crypto people.
Yeah, because that's it. Because nowadays, especially in crypto, people don't have that patience. Everybody wants to be a millionaire in 30 days in crypto. And I think that's one of the reasons why they kind of get into crypto. But formation for you, are gold and silver like a signal, considering that there's a massive divergence right now? Gold, a massive divergence.
Yeah, I think that that you can use gold and silver pretty well to basically look at a reverse dollar. That's basically how you can look at it, right? Like if they're doing well, like I said, they're flighting to safety. The dollar is just like, it's not so great. And it could be a signal, indeed, an early signal. But the question is like, what kind of expectations do you have? Like I said, like people want to get rich with crypto in 30 days. Yeah, it's maybe the wrong expectation. And the same with this. Will there be a rotation towards the next best thing? Which, yeah, very likely could be crypto. Sure. But the question is, of course, when? And yeah, that's something that we don't know by just looking at these charts. But what I do find interesting now is that it all, again, leads back to macro. And I keep talking about this manufacturing new orders chart. But you can see it very well over there, actually. Crypto was, for the first time ever this cycle, on a QT run, right? Like the liquidity got drained from the system and Bitcoin was running. But guess what? It was all a little suppressed. We did not have a euphoria stage. We did not have that typical alt season. We had nothing like that. So everything that we have seen so far, I think, was just crypto on its own and the native crypto investors that had a certain expectation with it, but not because of the macro or anything related to that. That's even yet to come. And silver and gold now going up just only reflects that the macro is just not doing well. And I think people are now kind of in that snowball effect. It's a domino effect, and whatever started it, Bill explained that a lot better. But I think that that's now what's going on. And then whenever we indeed get more QE, we get more money printing, we get more rate cuts, whatever kind of direction it's coming from. Again, I'm repetitive, but that's fuel for the crypto tank. And there's a lot of fuel right now. So I don't mind seeing this happening. And this could be a signal. What's interesting to watch is the copper versus the gold chart. Every time that reverses, that's a pretty good signal for crypto actually as well. It just shows, hey, it's all more risk on. And that chart has been tanking since basically the last crypto bear market started already. So it's just another way of seeing like, hey, everything crypto so far was purely because of crypto, not anything macro related. And that will reverse at some point. They have printers for that.
Okay. Okay, awesome. And then just very quickly,
You're back.
I'm back.
Yeah.
Okay.
We do hear all your Tinder notifications.
We have a storm right now in the UK, and then it's just like, just very quickly, I'm going to finish it on this last question, probably to Bill first, if that's okay.
Yeah.
Are gold bugs going to get into gold, or into Bitcoin, or are they not going to get into Bitcoin, if that makes sense?
Well, there's no question that eventually they're going to have profits to such a degree. In other words, in 2017-ish, or in the history of Bitcoin, Bitcoin would go up, people would have money, they'd want to go to the casino and do all coins, right? You get Bitcoin move, and then you get alt season. I think people are eventually going to have profits in gold. And then I think you may have some sector rotation in equities where they rotate to just different things, which could be the Bitcoin ETF. I don't think people who have physical gold and silver, the reason they have physical gold and silver is because they don't believe in anything. I don't think people who are sitting on physical gold and silver in their house or in a vault are going to go, hey, let's trade Bitcoin today. But I do think traders, right, who make money on these moves are going to rotate to the next thing that moves, which you would hope is Bitcoin, ETH, and friends.
Yeah.
What about you, Formation? Do you think gold bugs will actually get into Bitcoin?
Yeah, I think a part of it, yeah, because these are indeed the people that are just in because, not because it's looking nice. They mostly don't even have it physically. It's just because it will be worth more over time. And only if they take some profits out. We saw the same in 2020, actually, during COVID. And when everything was not looking so bright, gold was going up like crazy. And at the moment that run really stalled out, we saw Bitcoin going up. And I think that somewhat has something to do with each other. So yeah, I think that rotation eventually will happen, and unfortunately not with the total gold market cap, but a fraction of it is enough to make the first domino stone fall, and then the rest will follow. So yeah, I think that they partly will.
Yeah, and I think in funds,
I was going to say, I do apologize for my camera and everything. I'm not entirely sure why nothing's working. I think because everything's connected to the Wi-Fi, but carry on.
No worries.
No, I think what's going to happen is in the pension fund and stonks world, that they're going to go in all at once and they're going to say, we're going to buy gold, we're going to buy silver, and we're going to buy Bitcoin and ETH. It's just going to be this alternative money allocation. And frankly, I think
index with these blue chip assets,
that's right. So it may not be a situation where gold and silver go up, they top, and then Bitcoin goes. It just made Bitcoin board the train. And these equities guys are like, we're underinvested in all these dollar alternative assets because that's, at XRP, ETH, Solana, in stonks, they don't have this tribal, which altcoin's better thing. They just go, okay, decentralized rails, not dollar, excellent. Group it all together and go. They're already doing it. Like it was gold, then it was silver, then it was platinum and copper. It's just going to spread out because the pension funds and the big stock funds are going to say, okay, and the general public is going to say, okay, time for a 10% allocation. First it was 1, then it was 2. Bank of America said 4. I know a guy that says your portfolio should be 50 stocks, 30 Bitcoin, and 20 other, which could be gold. So those numbers have been out there. They're out there.
Yeah. No, that's completely fine. I do actually agree with that. I do think gold, although it might be too volatile for some people who are in, Bitcoin might be too volatile for some gold buyers, gold bugs, but I think times are changing, especially when you consider how many corporations are coming into Bitcoin and holding Bitcoin on their balance sheets. These are companies and industry. These are companies that are raising not just millions, but billions of US dollars to buy Bitcoin. And I think people, are starting to pay more attention now. So the key takeaway today kind of is, and I really do apologize for all the trouble that I've had with the Wi-Fi, but the key takeaway is that precious metals are making all-time highs. It's not random. It's a reflection of falling confidence in yields like bonds, stocks, saving accounts, blah, 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 blah. It's also, what did we talk about? The central banks, their pressures, etc. Golden political instability, long-term currency concerns that we've got. And historically, when gold and silver are strong, it does not guarantee Bitcoin will rise immediately because there's not a very strong correlation, but it kind of sets the backdrop for it to happen. So we're not going to predict tomorrow's price because gold and silver are going up, but we do kind of think that this is a curve that Bitcoin will follow. And that's brilliant. Thank you everyone for joining us. Thank you, Bill Noble. And I am waving to you guys, but obviously you can't see it. Thank you, Formation, for being here today. That was a really good live stream. I've actually learned quite a lot from you guys. Amazing.
Yeah, thanks, Bill. You know what you're talking about. It's important, but you give interesting insights, man.
Yeah, man, I appreciate it. Listen, man, you got the best charts out there, man. You're just terrific. I knew it too. I was like, you know, I'm going to say this and this and this, and he's going to pull up the chart.
Sure.
Yeah. No, I knew it. He was going to have. He was going to have altcoins versus silver.
Yeah,
silver is the altcoin of precious metals market. It's
true.
You had it. So, Crypto Princess, always a pleasure to be on the show.
Oh, okay, thank you. So just very quickly, guys, on Thursday, we've got a crypto story dropping from Ed Juline, who used to be was the former director of Bitcoin advocacy at Strategy, literally Michael Saylor's second man. And then on next Tuesday, we have the Christmas party with Randy, with Army Piper, with Crypto Billy, with Alex O. And then it will be the new year. So hopefully we'll see everyone in the new year. Have happy